Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Great to have you with us here at ausbiz. So let's check what happened overnight. Investor sentiment remaining somewhat subdued. European shares, they rebounded from three-month lows led by energy and tech stocks. However, on Wall Street, the post-US election rally has stalled with the major indices falling after the latest inflation data, which rose as expected. The Dow had some support from Walt Disney after the entertainment company reported quarterly earnings that beat estimates and offered strong guidance for the coming years. Tesla shares reversed while Rivian Automotive was down even more on reports that the Trump transition team is planning to end a consumer tax credit for EV purchases as part of a broader tax reform legislation. And in terms of the other Mag 7 stocks, somewhat mixed with Apple the pick of the bunch. Tapestry shares hit their highest level since 2013 after the Coach parent said it was terminating an $8.5 billion deal for Capri Holdings after that was blocked by a US court. And US listed shares of BHP and Rio followed the iron ore price lower. Well, ongoing economic growth, a solid job market and inflation that remains above 2% target means the US Central Bank does not need to rush lower interest rates. That's according to Federal Reserve Chair Jerome Powell. He said the strength we are currently seeing in the economy gives us the ability to approach our decisions carefully. Well, US producer prices increased in October, lifted by higher costs for services. The producer price index up 0.2% after uply revised 0.1% in September, and core PPI increasing 3.5% year on year, which was slightly above estimates. Meanwhile, weekly jobless claims, they fell by around 4,000 to a seasonally adjusted 217,000. And US Treasury yields briefly ticked up after that inflation data before then easing, the 10-year at around 4.42% and the 2-year lower at 4.26%. And the US dollar has extended its recent gains to be trading at a one-year high, while the Aussie continues to fall. It's down at 64.6 US cents. In terms of commodities, oil prices slightly higher with a steep drawdown in US fuel stocks outweighing oversupply concerns and a stronger US dollar. Brent crude futures almost 0.5% higher at $72 a barrel. Metals prices remain under pressure, copper down marginally while iron ore down more than 2% at $98 a tonne. And gold has fallen to a two-month low of $2,568 an ounce. Bitcoin, that has suffered from some profit taking to be trading below 88,000 US dollars. Well, earlier I caught up with Brad Gastwirth from Unearthing Opportunities to get across what we're seeing on Wall Street.
All eyes on inflation for sure. And we saw a slight uptick. Nothing to get too worried about. I do not think the Fed's going to change its stance. But yeah, I mean, I think some were thinking that you'd see a little bit lower pricing that would actually cause the Fed to be a little bit more aggressive, but that's certainly not the case. A little bit of an uptick, but pretty much in line with what most people expected. So not off the rails yet. It's something that we have to closely monitor, and I think everybody's paying attention to it. So right now, it's sort of stay the course for the Fed.
We did actually hear from Fed Chair Jerome Powell saying that the strength he's seeing in the economy gives his ability to approach those decisions carefully, saying they're not going to rush to continue cutting.
Yeah, I mean, he also went fairly aggressive with that first 50 basis point cut. So, after the 50, we got that quarter. I think right now it's, we're going to get one more read and we'll see what that happens before that next meeting. And, if prices do inch higher and if they're larger than this current CPI reading, I think there might be a pause in the near term. But I think right now there's a lot of reasons why that, to inflate or to give more growth to the economy here in the United States. And cutting rates is one of those ways. And it's been effective. We'll see what happens, though.
All right, Brad, let's turn to the post-election fallout. And of course, since that result, we have seen the Trump trade very much underway, has stalled just in the last couple of sessions. What are your observations?
Yeah, I mean, we saw major drastic moves in a bunch of stocks that were related to the trade. And Tesla was one of those. Clearly, Musk was very involved. And the increase in Tesla stock, which I think Musk, I think it was quoted that he paid around like 100 million to the campaign. But I think he benefited in the tens of billions based on that stock move. So I guess it was a good trade for him. Ultimately, it makes sense. I mean, the stocks had a big move up and to the right, for the first few days post the election results. Now they're coming back a bit. We're still seeing Bitcoin strength. I think you're seeing a lot of interest in crypto given what they expect from the Trump presidency. But ultimately, I still think the Trump trade works. I still think the markets are going to make higher highs into the end of the year. So I still think you need to be buying any dips we see.
Just returning to Tesla, how do you see its valuation there, given where it's up some 30% since the election?
Yeah, I mean, well, value. I've always said this. Valuation is never a reason alone to buy or sell a stock. And we could argue on a lot of these companies that valuations have reached levels we have never seen. That being said, we're also, a lot of the numbers that people are forecasting are way off. If you look at NVIDIA, analyst expectations have almost doubled to where they were prior to the beginning of the year. So analysts have not really historically gotten numbers right. I think valuation for Tesla, you can't look at this as an automobile company. You have to be looking at this as a robotics an autonomous company, and I think that's why people are giving it such a high valuation. Ultimately, it's a little bit rich for me at these levels. I think the EV part is clearly the profit driver, and I think you're going to see a little bit of hiccups, and we've already seen production numbers come down slightly, especially compared to expectations. So I'm not chasing Tesla here up 30% post that election.
Yet, given Elon Musk clearly has the ear of the incoming president, I mean, that's going to play into his companies very clearly, isn't it?
Absolutely, Andrew. I think you're spot on there. And I think most people are expecting that as well. I mean, ultimately, he was one of the main reasons why you saw such a sweep for Trump. Musk is one of the most watched and followed people on the planet, and he's very influential. And so I think that's why you're seeing these appointments. I also think there's going to be a pretty close-knit relationship between the two into the presidency, and it's not surprising at all in some of the moves we saw.
Brad, you mentioned Bitcoin. Can investors afford to avoid crypto at this point, given what we know about Trump's policies and clearly favouring a lighter touch in terms of regulation?
Yeah, it's a really good question here, Andrew. I actually think you're right. I think you have to have exposure if you don't. I do think there might be a little bit of a pullback. We've gone pretty drastically higher recently, but I think you're absolutely right. I think with more policy coming and interest in the crypto world, I think there's going to be more businesses and more interest in the space, which will ultimately lead to higher prices. That being said, just because crypto goes higher, it doesn't make me any less bullish on gold. I still think gold is one of the best safe haven asset classes to invest in. And we saw a little bit of a pullback on gold post the election. I think on the chart side, if we break down further here, it does get scary on a technical basis. We keep the support, it actually looks pretty good. So fundamentally, though, I think gold, I've been saying this for a number of years, had your program sounding like a train wreck. I still think gold is a must-own asset class for all individuals.
Well, because it's being hurt very much by the US dollar at the moment, which is continuing its ascension.
Yeah, well, it's we'll see what happens with the dollar over the next, let's say, in the near term. We'll see in the next few quarters. On a longer term basis, I think there's some major concerns. But you also we have to really play into the think about macro situation, and if things escalate on any of the levels across the world, and there's so many different cross currents currently, you look at precious metals as one of the most tangible assets globally. So I still see it as I still expect it to rally off the levels of the recent pullback. I think you're going to see the commodities do well, and I'm still bullish on gold and silver even with this pullback.
Brad, just stock specifically, Supermicro Computer. What's going on there, particularly as far as having to delay its report with issues with the auditor?
Yeah, Supermicro, I feel like it can't get out of its own way. When you have auditors resign abruptly, that happened was like a few weeks or months ago. The stock got significantly hit, but it's at that point, I think I spoke live about Supermicro. I would not have chased it then. I would not be buying it now. I think there's too much hair on the story, and when you have auditors resign, you have to wait till things are clearly resolved before you jump in on the investment side. So, it's a topic du jour here in the States because they actually had a lot of exposure to some of the nice emerging trends in technology. That being said, you're also starting to hear shifts away from them now because of the financials. So I think they're unfortunately in between a rock and a hard place. I don't think it's investable at this moment.
All right, interesting. Elsewhere, Amazon. On the e-commerce front, I gather it's just launched Haul. What's that?
Yeah, so Haul is interesting. So you've seen a lot of increase in consumer spend from Temu on the China side and Shein as well. And Amazon Haul is going directly after those behemoths, which I mean, they're the largest one out there. So, they should be. On Amazon Haul, you're having all products, I believe, are under $20. I think just the beta launch now is in the US. I was looking at it with my daughter earlier today. I mean, there's some really interesting things on that site, but ultimately, I think, it's the right move by Amazon. Amazon is a force to be reckoned with in the e-commerce world, and I think they're going to do quite well. I mean, they have the reach with Prime of hundreds of millions of people. They're going to do quite well with this low-end offering.
All right, just before we go, Brad, how are you viewing those Chinese stocks at the moment, given the stimulus there is still underwhelming the market essentially?
Yeah, and I mean, actually, this is a really good point, Andrew, because I've talked about China stocks that are not listed in China as almost uninvestable, because I feel like there are more risks that can happen overnight than positive surprises. I think with the Trump presidency, Trump is not going to back away. He's not going to be soft on China. And I think this is ultimately going to hurt those companies trading domestic, trading here, from Chinese companies. So I think Chinese companies, A shares in China, or if you talked about companies in the Hong Kong index, I think you can be okay. I think investing in Chinese companies that are listed here in the United States, I think are problematic. So I think there's definitely more of a downside risk than an upside surprise with any news headline. And to me, it's just not worth that risk reward.
That is Brad Gastwirth from Unearthing Opportunities. Let's turn to the local market as we're just about to get underway. Looking for a very positive start there. SPI futures up almost 0.75%. Stay with us. Juliet's going to take you through the open in just a couple of minutes' time.